Hey y'all, Jen Hernandez, Loan with Jen. Today we are talking about the basics of a VA loan, Veterans Administration. Veterans, we gotta help our veterans. Stay tuned. Okay, we're back. Basics of a VA loan. What are they? So if you are a veteran, active duty military, a service member, or in the National Guard Reserves, you are probably eligible for a VA loan. So the first thing that we must do is get a certificate of eligibility. This can be obtained online by you, the veteran, or you can contact a lender. You could contact us, for example, and we will be able to obtain that for you. We do have to have your DD-214 enabled to be able to do that, but again, you can also obtain it on your own. So assuming that you are eligible, which your certificate of eligibility will tell you if you're eligible for VA benefits. The main reason that veterans go VA that we mostly see is it is a 0% down loan or 100% financing all the way up until $510,000 in Texas anyway. The conforming limit is $510,000, $400,000, and VA matches that. So in other parts of the country, that maximum limit might be higher, and then you can go up to $2 million actually on a VA loan. But after the $510,000, you do have to put a down payment on the portion above $510,000. So let's say your price is $610,000, and we'll loan 100% up to $510,000. That $100,000 difference has to have a 25% down payment. So it would have to have a $25,000 down payment. Now, talk to your local lender about helping you figure that out, but for the most part, 100% loans for VA, which is fantastic. There is no PMI on VA loans. Again, we're talking about the basics of a VA loan. No down payment required up into to $510,000. No PMI, no private mortgage insurance monthly. There is, however, a funding fee that the VA gets that's financed into the loan. If you're a first-time user of your VA benefits, it's 2.3% of the loan amount. So on a $100,000 loan, that would be $2,300. Again, it's financed in, spread over 30 years, so it's a minimal effect to the veteran. If you're a subsequent user, it's a 3.6% funding fee. Now, if you can put 10% down, it goes down to 1.4%, which is really minimal. So some veterans do put a down payment. Now, if you're disabled and the VA has labeled you as disabled on your DD-214 and your certificate of eligibility, then you don't have any funding fee. It is zero. And if you're 100% disabled, there's actually in most counties, there's a tax benefit where you don't pay property tax as well. So talk to your local lender about that. So again, we've gone over the funding fee, zero down payment unless your price goes above $510,000. You do have to put a little bit down. Now let's talk about VA, more basics of a VA loan. So low rates, VA loan rates are very low, similar to FHA. The credit score for VA, it varies from lender to lender. They will go down to 600. Some lenders have a minimum of 620 or 640. So again, you need to check with your local lender to make sure, depending on what your credit score is. Maximum debt to income ratio in most instances is 55%. And also VA is very lenient on past credit blemishes like bankruptcies, foreclosures, credit collections. We're more lenient than the other types of loans on that. So again, check with your local lender on how that might apply to you. Now, a couple of last things. We're almost done. Basics of a VA loan. 6% of the price can go towards your closing costs. Now, the seller credit cannot exceed closing costs. So if your closing costs are $7,500, the seller credit can't be $10,000, and then you pocket the extra $2,500. So up to 6% of the price if you have a $200,000 purchase, that's $12,000 that could go towards closing costs. So average closing costs, you know, with prepaids and all that, is probably $7,500 in some markets. In my market it is. But you could also use that extra money if you wanted to purchase, you know, what we call points to buy down the interest rate. So there's lots of cool things that you can do. So talk to your local lender. Again, you pretty much can get all of the closing costs paid for by the seller. That must be negotiated. It's not mandatory, and the seller doesn't have to do it. So make sure you get with your realtor and your local lender to help you to negotiate that with a potential seller, okay? The last thing that I will mention that's very important on a VA loan is co-borrower. So the only type of co-borrower that VA will allow is a spouse. You must be legally married. No common law, no live-in, it's my girlfriend. It has to be a legal spouse that is the co-signer. Other than that, we're not allowed to have a co-borrower, co-signer in order to help the veteran qualify. So that's very, very important to know, especially if someone's not going to live in the property. No non-occupant co-borrowers. So make sure to talk to your local lender again about that and how you could qualify for a VA loan. Hope you've gotten a lot of tactics. Get with your local lender. Talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.